Hey traders, Jason here from Leavitt Brothers. Happy New Year. It's been a few weeks since I've done a video. I've been on the road. I spent Christmas at Steamboat where it seemed like I had the entire mountain to myself. There just wasn't that many people there, as is typically the case at that time of year. We took a pit stop in Utah. We went to Arches on the way to Arizona. Arches wasn't very crowded either, and with the government shutdown, we didn't even have to pay to get in. Then we were off to LA for a week. Now I'm back in Colorado, so I'm going to get back to my weekly or like twice a week videos that I was doing last year. Okay, the market tanked in December, and since the S&P has rallied about 200 points. At the low, breadth indicators were at levels that hadn't been seen since the financial crisis. In some cases, they were even worse off. There was definitely some extreme pessimism. The financial crisis took like 18 months, 24 months to completely unwind, yet this time around we got similar bearish readings in just 3 months. Okay, market topped in October, bottomed in December. In only less than 3 months, we got the same type of bearish readings. In this video, I'm going to go over some of the trades that we've had at Leavitt Brothers. Okay, when the market bottomed, we posted numerous long setups for our subscribers. Yes, the trend was down and sentiment was very negative, but there were some decent setups. And if the market's going to bounce, why fight it? Go with the flow and be responsible with stops. Okay, so here are some of our trades. Okay, I'm also going to zoom in with a couple of these charts and show you how I traded them. I'll do another video later this week where I discuss the state of things, the breadth indicators, the index charts and such. But for now, I just want to talk about some trade ideas that were posted at for Leavitt Brothers subscribers. Okay, so let's go through them. Okay, here's AMD. Since gapping down in late October, it had traded in pretty neutral, up, down, up, down. Okay, it was basing a little bit here, resistance level just above 19, popped. Got a little follow through, went 10% in a couple of days. As you can see today, it's pulling back. But to me, in this environment, this is all we're looking for. Okay, the market overall is weak. It's trending down. It's below several key moving averages. So any trade to the long side is meant to be just a quick trade. So for me, when you have a chart that's trading in a range and you can get a trade within that range for 10%, that's pretty good. All right, here's Abercrombie & Fitch. Stock was neutral for several months, which by default meant it was actually doing fairly well because the market wasn't doing well. Took a little dip here, recovered, resistance was taken out, and it has grinded its way up from like 19 up to 21.5 yesterday. Earlier today it hit 21.5 again. So another 10% mover in a week or so. Okay, in a few minutes I'm going to go into more detail on this one about how I traded it. Boot, another retailer that was doing well. Obviously, it's a weak stock trending down, lower highs, lower lows, formed a little bit of a base, popped up, formed a resistance level just above 17.5, and then popped from there. Okay, so again, this is all I'm looking for. Not looking for a big run, not looking for a full-blown rally. I'm not even looking for the overall downtrend to reverse itself. I'm just looking for a bounce within the downtrend, and given that the market was cooperating, this was a pretty good candidate. As you can see, it went from 17.5 to 19.5, so it's better than 10%. Here's CC. This stock was a darling back in 2016-17. It rallied, all the way up to like 50, and then it got, hit pretty hard. This year, it got cut in half down to 25. You can see double bottom here, right at 25 in early December, late December. Traded above resistance level, paused for a few days, and then moved up, paused again at the 50, and then moved up with some force since then. Okay, really good trade, really good overall pattern despite what was going on in the market. Okay, this would be a good setup regardless of what the market was doing. It was just kind of nice that it put in the second bottom of the double bottom at the exact same time the market was bottoming, so that confluence of factors added to the fact that it's able to do really well. CRON, neutral stock, all over the place, high, pretty volatile, gaps a lot. Percentage-wise, it moves a lot. Doesn't trade with the market, just kind of all over the place. So it had gapped up in early December, came all the way back down, tested the 50, was kind of slowly move up in a little bit of a pattern. I posted it as a long. As you can see, it popped, went from 10.5 up to 12.5. So it has treated us well. I don't trust the stock. Who knows? Maybe eventually it'll go up to 20. Maybe it'll go up to 30. I don't know, but I absolutely don't trust it. There's too many times in the past where it's like gone up really well and then just come right back down. So perfectly happy to get 2 points out of this one. DocuSign, relative strength was pretty good. Was weak over here, September, October, but November, December, it was holding up fairly well, and it has done absolutely nothing. I thought it would actually do fairly well because the relative strength was good, but it hasn't happened. So, not all the stocks we post are, work out, and some of them, probably about a third of them never even trigger. And so far, this is one of those that if you play breakouts, it hasn't triggered. If you zoom in with intraday charts, you could have found an entry somewhere in here for a trade from the middle of the range up to the top of the range. DSW, another retailer that overall wasn't doing that well, but formed a little base here, popped up, formed a resistance level here, somewhere above 25. And then as you can see, it quickly popped, within 2 days, it got up to its target. Perfect trade within a downtrend. Again, I'm not expecting a big move, not expecting the overall trend to reverse, just expecting just a bounce within a downtrend. Take the money and run. Don't even bother trailing it with a stop because you're not going to give it that much room to move around, okay? I'm not going to trail a stop below the 50 because that's too much of a stop, okay? You get up to your target, you take the money, and you're off to the next trade. Electronic Arts, very weak stock. For a high quality company, this is a really weak stock. It just trended down, 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 formed a little base here, popped up, resistance level just above 80. And as you can see, it took out resistance and quickly went about 10%. In a few minutes, I'm going to zoom in and show you how you could have traded this. Because in all cases, I find stocks on the daily charts, okay, they have to look good on the daily charts, and then I zoom in with the 60-minute chart, sometimes a 30, 50-minute chart. I zoom in on different time frames with different moving averages in order to find a decent entry that gives me, a decent stop. Okay, and I'll do that with this stock in a minute. FAS, the leveraged financials ETF, really weak, popped up. As you can see here, it kind of got scooped up. Let me see if I can draw a line here. You can see it kind of got scooped up here by its 50, and then it popped up to our target. So it moved from 42.5 to 48. Our target was 48, so it did really well. This is something I look for in the hourly chart where it gets above a key moving average and it can consolidate and use a key moving average as support, and then eventually it continues on. Okay, so this is a nice one. Hit its target last week, and then if for those who stayed in, it hit the target again yesterday. GE, I don't know, maybe this means the market's getting a little bit ahead of itself, because when GE does well, you got to kind of wonder. But the stock has done really poorly, put in a double bottom, resistance here at 8, broke out, and moved quickly to 9 within a couple of days, less than a week for sure. So again, 10% mover. Am I expecting GE to lead the next bull market? No. Will it? Probably not, but who knows? I don't really care. It's not my job to guess and figure out what's going to happen. My job is just to read the charts, play them as they unfold. For me, hey, double bottom, resistance, zoom in with an hourly, find an entry that gives you a nice stop. You get a 10% move in a couple of days. That's good enough for me when the market is bouncing within a downtrend. Okay, Gush. And I'm going to start flipping through these charts a little faster because I don't want this video to be too long. Okay, I did a video last month where I talked about when oil was weak and it was going to eventually bounce, that when it bounced, there's going to be some big money to be made. So, of course, I posted Gush on our trading list. It is the leveraged oil ETF. It has moved from 6 up to the mid-11s. You can't nail that entire move, but you zoom in with a 60-minute chart, you see how it kind of dances with some of these moving averages. And as you can see, it gets above the 50 here, comes down and tests it a few times, finally gets above it here, tests it one more time here on the 3rd, and then takes off. So big percentage mover. Oil was bouncing, so of course this one's going to bounce. A lot of oil stocks look the same. Oil stocks tend to move similarly, so I figured, instead of spreading money out between 4 or 5 different stocks, why not just put it in this one? This stock is, unlike a lot of ETFs that are they're heavily weighted with just a couple of stocks, so you could just buy those stocks instead of the ETF. This is an ETF that has like dozens and dozens of stocks that are only like 1 or 2% each. So it's like truly a mutual fund of the oil industry. So no one stock is going to have any big advantage or any undue, any big weighting. So if oil bounces and the stocks are mostly bouncing, it's easiest just to go and buy this one. All right. Here's Match. Had it as a breakout. Could have played it as a breakout. Had it as a buy like in here. I figured a gap down. It was basing. I figure if the market does well, it's going to move up. It hasn't really happened yet. It's not a bad trade. It just hasn't moved up yet. Just the way it goes. Not all of them work out. Excuse me. All right, so here's New Age Beverages. Same as Cron. Up, down, lots of volatility, lots of gaps. Can't really trust it. Moved down to its 50, found support there, was trading in a tight range. I figure, hey, if we can break out here, maybe we can move back to the top of the range near 7. It hasn't happened yet. It's the way it goes. Okay, sometimes they work really well and you get a quick 10-15% move. Sometimes they just don't work out, and that's where you cut them loose and you lose a little bit. If you could lose a little bit on your losers and make more on your winners and in your really good winners, if under the right situation, if you could press your winners and take a bigger position, then things work out in the long run. So this one so far, it's not bad, but it's just not working yet. QTT, and then I'm going to skip to those intraday charts that I mentioned earlier. All right, so this is an IPO. If you ignore the first day it went public and then the second day, it's actually kind of a nice base. Okay, just like a really nice base here. It kind of started curling up. So we've been in this for a couple of weeks. It popped here, consolidated, popped again. So on a percentage basis, this thing has moved huge. So our subscribers have done well with this one. If you get a pullback here that finds some support, somewhere over here, I think it's still playable. And then if the market tanks, then I'm not going to be going long if the market tanks. But if the market can rest and then leg up again, I think this is the type of stock that can pull back and then move up probably $10. All right, let me skip ahead. Guess what's happened when I'll do this one first. Here's American Eagle. Along with the other retailers, this one hasn't really worked out. It broke out today, gave it all back. So right now it would be a losing trade if you got in today or if you got in yesterday on the breakout. It happens again with a lot of these that are trending down, lower highs and lower lows. I'm just looking for a bounce within the downtrend. If the market cooperates, most of the time they work. If they don't work, then that's fine. Okay, they're not all going to work. Your job when they don't work is to cut them loose, and don't let small losses turn into big losses. All right, let's go back to a couple of those that I mentioned earlier. Here's Abercrombie & Fitch. Here's the daily chart. So I want to zoom in over here. So what happens is I find a chart like this on the daily that looks pretty good, okay? Neutral chart because it's basing, strong relative strength because the market wasn't doing well. I got a resistance line here. So what I'm going to do is I'm going to zoom in on the 60-minute chart. And what I'm looking for is like a change in character. Okay, so over here, I see the stocks trading above and below its 50. Remember, this is the hourly chart, so it's the 50-hour chart. And then over here, it gets above the 50, and it starts consolidating. So that's my sign that, like, the tide may be changing. Okay, instead of just trading very neutral, the tide may be changing. For it to get above its 50 and then kind of consolidate here, this gives me a frame of reference. Okay, so I'm going to get into this stock knowing that I can put a stop below 18.5 because this would prove to be a support level on this day. And of course, you got the 50 right below it. Okay. I don't know if it's going to go 2 points, 3 points, 5 points, or maybe 50 cents, but because I got a tight stop and the entire market is improving, it gives, I have a decent entry. Okay. Another thing you could do, this is the hourly chart. I can zoom in on the 50, zoom in with the 15, I should say. And I want you to notice something as I flip back and forth. Okay. Here's the hourly, and you notice the 50-day moving average right here. Here's the 15-minute chart. Notice the red line here is the 200. This happens often, okay? It's something I look for. Okay, I'll look at the daily, I'll look at the hourly, sometimes a 30-minute, 15-minute, and oftentimes moving averages on different time frames actually line up. Okay, you might have the 50-day moving average on the daily chart lines up with a certain moving average on the hourly, which matches up with a moving average on the 15. Okay, so that increases I want to say like my excitement with the chart, because it gives me, if I have a stop, if I have the same stop that is indicated on multiple charts, then I feel like, hey, I got a really rock solid stop in place here. So if I flip back and forth again, you can see, 50 here, 200 here. That gives me your stop, and then who knows what the upside is going to be. Okay, you never know. Okay, let's move on. So here's boot, weak stock, based here, pop. Okay, so let's zoom into this area here. So on the 60-minute chart, you can see that it was riding. It's the orange line here is a 21. Gets above it. Let me see if I can draw. So it gets above it here, tests the 21, comes up here, and you can notice that it kind of rides the 21 up here. It also gets above the 50 and rides that up here. Okay, so a stock was weak, it gets above a moving average, comes down and tests it, gets above the moving average, and then it rides a moving average up. And so there are entries in there, and then of course the moving average provides for a stop. This is the 60-minute chart. Notice the blue line here. If I zoom in, notice the red line here is basically in the same area. Okay, oftentimes the 50 on the hourly chart matches up with the 200 on the 50-minute chart. And so I have two different sets of charts that are giving me the same stop, and I'm more likely to play those because the stop I'm going to play is pretty obvious. Okay, one more chart, and I'm going to finish this up. Here's EA. Okay, again, weak stock, based, popped. Let's zoom in with the 60. Okay, as you can see here, it rode the orange line, which is a 21 down. Let's draw a box here. You can see it got above the 21 and consolidated. Remember, this is the hourly chart, so 6-7 bars here is only like one day. Consolidates above the 21, then it rides the 21 up. Then it gets cupped here by the 50, and then it takes off and goes from like the high 70s to the high 80s. Okay, so the daily chart, it looks decent, okay, but it's still a really weak stock. But then when you zoom in with the hourly, you realize, hey, it gets above a key moving average basis here above basis and gets cupped by the 50 and then moves up. So it's obvious you can put a stop in below 78. Gives you a frame of reference to judge it from. If I zoom in one more time frame with the 15, notice the red line here is about the same as the blue. So the blue line here, cupping it, red line here, cupping it. Okay, so that's how I operate with these. I find trades on the daily, and then I zoom in with the hourly, 30-minute, 15-minute, 5-minute sometimes to get a good entry. That's how I do things. Couple moving averages, couple indicators, stochastic and MACD, and that's all I do. I don't really look at anything else. All right, like I said, I'll be doing a video later this week where I discuss the state of things. For now, I just wanted to give you a glimpse of what we've been doing at Leavitt Brothers the last 2 weeks. Thanks for listening. If you like the video and want me to do more, give it a like and share it with your trading friends. You can also subscribe to the channel right here at YouTube. Come check us out at Leavitt Brothers, where we provide market analysis and trading ideas to individual and institutional investors and traders. Again, thanks for listening, and I'll see you next time.